Good morning, this is Steve O'Hare from Signal Centre, and today is Wednesday the 7th of July, and we're looking at the energy sector today. We're looking at WTI crude oil, Brent crude oil, and I'm going to look at natural gas as well because there's a couple of interesting technical formations in that product. So we'll start with the WTI crude oil and we'll break it down from the weekly chart to the short-term charts to give a little bit of colour on the technical levels and indicators and formations that we're looking at. So we've been talking about this five-wave impulsive move in the crude oil, and we've hit the resistance that we highlighted. We've been highlighting this resistance for many weeks now, and we hit it hit it this week, and we have rejected it initially, and we'll give a sort of a full review of why that's happened. The oil prices initially traded with a strong tone yesterday. After OPEC failed to reach agreement on production plans, the OPEC Plus nations kicking back on that. There was, however, a sharp reversal yesterday and a strong dollar influence, which caused a reversal in this. We'll look at it on the daily charts, and we can see that this bearish outside candle is really significant. Now, price action since this candle has been formed has been slightly positive, so it may be just a minor blip, but if we manage to get below 72.35 today, then I think the correction could be starting with a vengeance. A big reversal yesterday. We had a $4 range in WTI crude oil. Now, looking at the 4-hour chart, we can see there is a couple of technical reasons that prices reacted. We had these previous lows, which acted as support alongside the Ichimoku cloud, which is an indicator I use a lot. So that came in at 72.38. Below there, we've got 71.63 support. So really need a clear break and a close below here on a 4-hour chart, and this would signify good potential for the ABC correction that we're really looking for. After a 5-wave impulsive move, we normally get this correction, this type of shape correction. So all looking at that really, and seeing how that goes over the coming days. We've got oil inventories out later, so please be aware of that. On the Brent crude, we've got a similar type of formation, and we've seen the prices react from the downward trending resistance line highlighted here, which came in just above $77. So potentially this 5th wave could end up being here, and then after that we would get a ABC correction, something along these lines. Let's make it a little bit easier to see. So really looking for that. This is currently forming a bearish engulfing candle on the weekly chart, but you can see from the daily chart on Brent, we've had that bearish outside candle, which is significant. So we held again at support. If you get the Ichimoku cloud in there, we can also probably see that we can see basically the daily Ichimoku cloud is way lower, but on the 4-hour chart, we can see that that acted as support yesterday as well. 73.20, the level to watch, a close below there on the 4-hour chart, and that would be a significant correction and further to come. However, we have had a really decent reaction from this support. So it's looking pretty positive from a really short-term intraday basis, but beware of another sell-off below that. Natural gas, we've talked about. We've got, let's get to the daily chart. This was really interesting. We had the triangle formation that we broke above. We came back, retested it, and that really reacted well. We posted a bullish hammer, and the projection higher has been pretty significant, and we've got up to 380 and reacted from there. We can see the daily reversal yesterday. We can see it across most markets, and that was pretty significant and formed a bearish outside candle. So again, levels to watch close by on the short-term chart around about 360. If it holds there, then looking to push up back towards 380 and retest them multi-year highs. I hope that's been a help to you, and look forward to joining you again next week.